I want to welcome Samson Mow to Build with Bitcoin, our podcast about innovating on the Bitcoin financial technology and talking to some of the players who are driving this innovation, as well as the investors and mentors that are supporting them. So, Samson, thank you so much for being our guest today, and appreciate your time and coming in.
Thanks for having me on, Lynn. It's great to be here.
Yeah. Well, we wanted to have you as one of our first guests because you are one of the original innovators in Bitcoin, and you have a long history of working with Blockstream and some of the early Bitcoin companies, and then now, starting Jan 3 and your various entrepreneurial activities. So if you would, could you give us please a little bit of a brief intro about your background in Bitcoin entrepreneurship?
Sure. So I guess my first Bitcoin company was working at BTC China. It was an exchange in China. Back in the day after Mt. Gox had collapsed, most people had moved over to BTCC. So for a time, it was one of the biggest exchanges in the world. And it also launched a mining pool, which grew to be one of the biggest in the world too at some point. I think we were at 15 to 18% of network hash rate. Um, so that was my entry point into Bitcoin. And after BTC China, I joined Blockstream and started working with Adam Back on Bitcoin infrastructure, building out the Liquid network, working on Lightning, and lots of other interesting technologies.
That work was really about scaling Bitcoin, correct? How to extend its usability.
Yeah, so I would say Blockstream's origin is really the genesis of this concept of sidechains. And this was something Greg Maxwell and Adam Back discussed on Reddit or Bitcoin Talk really early on, maybe in 2013 or 14. And that led to the formation of Blockstream. And the foundation work that Blockstream started was on sidechains. And then they started investing into Lightning R&D, I think in 2015. But yeah, you could say Blockstream is a company that's focused on augmenting and scaling Bitcoin.
And so then tell us about Jan 3 and when you left to start Jan 3 and what its scope is overall.
Yeah, so Gen 3 is a company focused on accelerating hyper Bitcoinization. And that is really getting Bitcoin to more people and reaching that tipping point at which people just use Bitcoin as their unit of account. So you don't have to convert Bitcoin to fiat anymore. Everything is Bitcoin denominated in Bitcoin, and you're spending and receiving Bitcoin for everything you do.
And the activities of Jan 3 involve everything from advising sovereign nations such as El Salvador. You were a big player in working with certainly with the Bitcoin bond and other aspects, I'm sure, of Bukele's transformation of that economy into a Bitcoin oriented economy, and other sovereign nations to the Aqua Wallet, which we're going to focus on a little bit today. But can you just talk about the big vision, accelerating hyper Bitcoinization? But when you put that into financial terms and how you as a business make money with it, what are the key financial activities that you engage in as Jan 3?
Yeah, so I would say that we are a two-pronged approach to Bitcoin adoption. The first is top-down, and this is what you're talking about, Lynn, working with governments, politicians, regulators, even central banks to implement some sort of Bitcoin strategy on the high-level nation-state side. But the other prong that we're pushing is the bottom-up grassroots approach. And this is supported by the Aqua Wallet, which we hope to get a lot of people using. Our goal is that Aqua onboards the next billion people into Bitcoin. So if you think about the world transitioning from fiat monies into a Bitcoin standard, that is going to be a multi-trillion dollar opportunity. And we want to be one of the wallets and pieces of that infrastructure that people are using in their day-to-day lives. So we say Aqua is your daily driver. It's your wallet that you're going to be using to pay for your gas, your groceries, and power bills and everything like that. So there has to be a big component of utility, but we want to reach the masses. And to do that, we also incorporated Tether, and we support Tether on the Liquid network. Because a lot of the world, the developing world, they are actually seeking dollar denominated value. So they're not looking for Bitcoin necessarily, but they're looking for something to protect themselves against inflation and hyperinflation in many cases. And that for them is the dollar. So holistically, we are all about advancing Bitcoin adoption, but we have two different approaches. And under the nation state side, we also have Jan3 Financial, headed up by Andrew Howard from our team. And that is to help countries, corporations, and high net worth individuals accumulate Bitcoin. So we figured if we're working on nation state adoption and orange pilling governments, we should have a business arm that would help them buy Bitcoin and store Bitcoin too.
I just want to take one step back. You mentioned Tether, and Tether is a stable coin, which is pegged to the US dollar. Can you just go into a little bit more detail for those who may not be as familiar with it, and why that's important in the ecosystem?
Yeah, so Tether is the largest and most popular stablecoin on the market. I think they're crossed 1 billion, 100 billion in AUM now, and they're leaps and bounds ahead of their nearest competitor. And for the most part, the world really just uses Tether. I think other competitors like USDC, they're really just focused on the US market and for people using Coinbase. But if you're looking at broad swaths of adoption, it's really USDT. It's the de facto standard for the world today. And Tether really matters because, as I was saying, a lot of people in the developing world, the global south, they need to protect themselves from inflation. So they've already adopted Tether as their dollar because it's hard for them to, one, get physical dollars because those are rare and difficult to come by. And two, a lot of these people are unbanked or they just won't be able to get a bank account for much of the reasons that it's difficult for people that don't have a fixed address or regular income to get a bank account. So they end up using Tether. So I believe the Tether CEO Paulo Arduino says Tether is sort of the last mile. They're serving the clients that the banks are not serving. They're dealing with the gap in the market effectively. So I guess this is why Tether is so important because a lot of people in the world are using Tether. And I believe a lot of Bitcoin wallets are not really focused on serving them either. They're either giving some derivative-based substitute for Tether, but that doesn't have as much liquidity or adoption or traction. Or they completely disregard that a lot of the world still needs stablecoins. So if our goal is to onboard a billion people and there's still 8 billion people left, we have to be willing to meet them where they are. And where they are is they want dollar denominated value. And with Aqua, we can give that to them.
And I look at it too. I mean, I think a lot of our listeners might be more in the US or Western economies, but I've lived in Mexico for 20 years, and even for, not even beyond the unbanked or those who may not have it, even businesses that are transacting globally and they have to send money. I mean, the entire wire transfer process or banking process in global south is much more complex and takes much more longer to settle. So another advantage is that immediate settlement that a stablecoin or tether provides in 24/7 banking or financial transactions and just being able to move money around. So that's something that's also facilitated.
Definitely.
Samson, we're recording in March of 2024, and the big news lately in Bitcoin has been ETFs. And so many people are talking about Bitcoin as a store of value, and you're really working at adoption for it being an entire financial system and the utility of it on day-to-day buying gas or buying a cup of coffee or whatever. So what is your thinking around that, and how are you thinking more broadly than people are just now starting? Wall Street is just starting to get caught up to this, but you see a bigger picture there beyond store of value, or how are you thinking about that?
Well, I think a large part of the block size war was the debate and contention around, is Bitcoin a store of value or a medium of exchange? And you had the big block camp saying it needs to be a medium of exchange first, and store of value is less important. And that's why they forked and made their big block versions and variants of Bitcoin. And we see that that largely fails. But this is not to say that Bitcoin will succeed if it's only a store of value. So while I have a great appreciation for the ETFs, I view them as a portal to the legacy financial system. It's this magic portal that lets legacy money pour into Bitcoin. And that's a good thing. As long as we understand what the structure is, we can kind of categorize it and treat it accordingly. But if you only allow Bitcoin to be a store of value and locked away in custodians that are servicing the ETFs or any sort of custodial structure, then I think eventually Bitcoin will lose its value. It will become captured much in the same way that gold has become captured. So a lot of the ETFs are starting to show their reserves, and even countries like El Salvador are starting to show their reserves. But you have to remember that in a centralized system, they can always not show their reserves suddenly one day, and then you go back to the old system where you don't get to audit and you don't get to see. So while you can see it now because they allow you to see it, you have to always remember that there is a flip side to that, which is they can revoke that. So Bitcoin still needs to be something that people can keep themselves as a bearer asset, an asset that you can keep in your own possession and your own custody. And that is sort of a bulwark against the rehypothecation or centralization of Bitcoin. So I think our mission to make sure that a lot of people have Bitcoin and can transact Bitcoin is a very pertinent thing these days when you have this vacuum hoovering up all of the Bitcoin into the ETFs, and also MicroStrategy too. So there has to be a counterforce, and that counterforce is that people can use it as a medium of exchange.
No, I completely agree with that. And I really, I love the fact that Bitcoin has been adopted first by individuals prior to it really being, institutionalized, if you will, or being purchased. But I do, yeah, I mean, it's good for Bitcoin, but it's also not what I think the intention was from the beginning for it to be a peer-to-peer transfer of value system that eliminates that need for third parties. When you're talking with nation states, how are you presenting this value proposition to them? Because it does kind of take away a central banking authority. What are the benefits that you show them or talk to them about for being more, number one, open to Bitcoin or integrating it into their sovereign policy in some level?
Right. So I think we have a very multifaceted approach. We tend to try to determine what the government of whatever country we're talking to is interested in. We don't just go and say Bitcoin is better, Bitcoin is sound money, you need to use Bitcoin or else HFSP, have fun staying poor. But that doesn't really work. So we try to understand what their needs are. If their interest is in generating money for infrastructure projects, and they have excess energy or untapped energy reserves, then we will present a path of financing Bitcoin mining through a Bitcoin bond, or if they have enough capital, they can finance their own operations and mine Bitcoin. Because with Bitcoin, a lot of the poorer countries in the world, the developing countries, they actually have a massive amount of excess power. They just don't have the way to tap into it and monetize it as simply as, say, a country in the Middle East that has oil. You put oil in a barrel and you sell it. It's very straightforward. With geothermal and hydro, you can't really export that. But now with Bitcoin, you can export that in the form of Bitcoin. So you can mine Bitcoin and build an airport, build roads, build railways. Some countries, they're interested in reducing emissions. They have emission targets. So mining Bitcoin can help with that as well by reducing methane emissions and flare gas. There's a lot of opportunity to implement mining-based strategies to hit environmental targets and goals. If they're interested in things like tourism or foreign investment, I think adopting some Bitcoin forward-thinking policies like making Bitcoin legal tender or removing barriers to invest with Bitcoin is a good avenue for them to pursue. So it really changes based off of who we're talking to. But the magical thing about Bitcoin is that it fixes so many things that we can bring it up in many different contexts.
And then you would charge a consulting fee for working with a government on different policies or strategies. Is that how Gen 3 operates?
We haven't yet, but we could. Right now, our focus is on working with countries that are interested in Bitcoin bond issuances, and then potentially we would take a few basis points off of the issuance in exchange for advisory and helping them structure the offering.
And the Bitcoin bonds actually are a way for some of these, depending on, again, depending on the country, but those who might be financing a lot of their infrastructure build out from IMF or World Bank, that it provides an alternative for them in some regards.
In some regards, I would say the Bitcoin bonds are more useful a tool for the countries that want to get out of indebtedness to the IMF or World Bank. And sadly, a lot of countries are not that interested. They just want the free, easy money. And that means they have to comply with IMF and World Bank demands, and they have to tread carefully. So basically, they're not really sovereign countries anymore. They're subservient to these world bodies that can tell them what to do in exchange for free money. But let's say you are a country that wants to be sovereign and have control of your own destiny, then you want to create a Bitcoin bond to break out of that debt sinkhole, because there is no way to pay off these debts. You're always going to be servicing interest on the debt because their interest rates are far higher. In the Western world, interest rates are maybe 2 to 3%, maybe 4, but for the developing world, it can be 8 and up north of 10. So it starts to compound very quickly, and you really have no way to break out of that other than implementing a structure whereby you incur some dollar debt, but it is backed by a harder asset that's appreciating against the dollar, which is Bitcoin. So this is really the only way that countries can get out of debt. The options that you have are either debt jubilee or default, or to move to Bitcoin. There is no other way out of debt.
Yeah, that's an excellent point. And for anyone interested, the work of Alex Gladstein is really important in highlighting some of these some of the ways these debts have worked to the detriment of the countries that are borrowing from them.
Well, even
Um,
at the US, you can look at the US as an example, right? Every 100 days, the US becomes $1 trillion more in debt. And that's just impossible to get out of. You can't grow your way out of that debt. It's just impossible to have real growth at that rate. And that's because the debt compounds. So you're just getting more into debt to service the debt.
Argentina's been a fascinating example of how that debt has accelerated, and then also how quickly Malay has been able to reverse it. And you're speaking with Argentina, or about to have some conversations with them.
We have a number of people helping to reach out on our behalf to set up some meetings. So hopefully we can engage with Malay this year. But I mean, his policies are already showing that change is possible, right? They've cut down their deficit by slashing parts of the government. They've closed the central bank. So I think they're on a good path to recovery. If they added Bitcoin to their strategy, of course, that would accelerate it. When Milei did his one of his first addresses, he said it will take 20 to 30 years for Argentina to really recover and for his policies to really come to light. But I think that could be accelerated maybe by a factor of 10 if they adopted a Bitcoin strategy this year or the next year, probably this year. And that's really what we hope to engage on and have a discussion about.
And when you go into these countries and you talk to them, is the Aqua Wallet a part of the strategy? Is that something that a government can use to help educate or bring on board their population? Or how does the Aqua Wallet fit into the other part of the Jan 3 strategy?
So, Aqua, we're more targeting it to grassroots, maybe new communities that are springing up and they need a wallet to use. So that is our main focus. But Aqua is open source, so a country that wanted to create their own wallet, like say El Salvador with Chivo, they could just take the Aqua code base and fork it and build a small part of the backend that would allow them to convert Bitcoin to their currency. The goal of Chivo was to allow people to switch between dollars and Bitcoin really affordably and with low friction. So that was a goal that they had in mind when building Chivo. But with Aqua, you could do the same thing where it'd be non-custodial, but you could still have this swap facility in the background that would allow them to swap for Argentinian pesos for Bitcoin if you wanted to subsidize that for the people to gain adoption. So I think Aqua is a very important tool, and there has been one country that has asked us, "Can you reskin Aqua like make it sort of like a Chivo wallet. And we started those discussions, but it's still early stage, I would say.
And just as a refresher, El Salvador, when they went on a Bitcoin, when they accepted Bitcoin as a formal legal tender, they gave every citizen a wallet with $30 equivalent. Is that correct? Of
Yeah.
Bitcoin that they could use in order to kind of give them the experience of what it was like to transact in Bitcoin, the immediate settlement, and again, just working on a Bitcoin wallet when you can send money to another individual and you see how quickly, it's seconds that transaction takes place versus pulling out a credit card or tapping a credit card and having all that, if you don't have credit cards. So I think the wallet is such an important function for the majority of the individuals in a community.
Definitely.
So Samson, let's go back to a little bit of the origin of the Aqua Wallet. As I understand it, it was a project that you started or that was started at Blockstream, and then you brought it on. And as the CEO of Jan3, how were you thinking about the development of the Aqua Wallet, and what features did you want to see? How did you determine, there are a number of wallets out there, but how is Aqua different, and what specific market or segment is it reaching?
Yeah, so the genesis of Aqua was at Blockstream. The goal was to create a simpler wallet that is more geared to the mass market. And it would have a lot of utility, is that people could swap funds for different things and maybe have integrations with the fiat banking system. And then when I started Jan3, we took that over because it was open source, and we started rebuilding it and augmenting it. But yeah, the goal is to create a wallet that offers a lot of utility to the end user. So in Aqua, you can see already that you have Bitcoin as your savings account, and then you have spending accounts, which is Layer 2 Bitcoin and Tether. So Layer 2 is a liquid-based wallet that has Lightning on and off ramps, and we have plans to add RGB eventually, so that your base is always liquid, but you're able to have these different channels to get on and off into that liquid wallet through atomic swaps. And then we have Tether, which will allow you to store your USDT in the Liquid network, because Tether issues it natively in Liquid. But we can interface with Tron and Ethereum and potentially others down the road. I think we're going to add some cheaper transport rails. So if you look at it, Aqua is a non-custodial wallet that lets you keep your own Bitcoin, Liquid Bitcoin, and UCT, but we have on and off ramps to different networks. And the premise of that is to really give the end user utility and the ability to interface with the whole world, because it'd be difficult to say everyone should use Liquid USDT. I think they should, but they're already using other networks for various reasons. And I think Liquid will deliver a superior user experience to them. But in the interim, we need to be able to support on and off ramps. And for the Bitcoin purist, I think some of them misunderstood Aqua, and they thought, well, you have altcoin support. We have altcoin on and off support for Tether transactions, but you're always keeping Liquid Tether on your wallet. So you can look at Aqua as a filter for the shitcoinery. So it's like a Brita water filter. It filters out the shitcoins, and then you just get pure dollar denominated value in your Aqua wallet.
Do you know what I love about it? And I've downloaded the Aqua Wallet and I've used it, and I have to congratulate you. I think the interface is first of all, when you open the screen, I think it says the wallet even your grandmother can use. But it's just a beautiful and very, I find some of the wallets, and I won't name names, but are a little, confusing. You have to go here and there and just figure out what the icon means. But yours is super clear. And what I really love is how you designate between savings and spending. So savings is your Bitcoin balance. And then spending would be however you're choosing to store it, whether it's in Tether or Liquid Bitcoin, and those are your more easily transactable. So, especially for this emerging market where people do need to store in a stable conversion rate, so they can't really have, if they've got to pay rent or salaries or food or school, they can't have that value fluctuating to the extent that their local currency does. And so they can keep that and know that whatever they deposit is going to be the same and that they can spend it in a short period of time. But then for their longer term views, for the quinceañera or for whatever, for buying a house, then they can actually have that in their savings account, which is Bitcoin. And so that designation, tell me how you thought about that when you put that in.
Well, I think that should be the logical thinking, because if you think of Bitcoin as your spending account and that you can use it on a day-to-day basis, that's probably not going to work out that well because of on-chain fees. And the the distinction is also better in this way, because if it's your savings account, you're not that worried about price fluctuations. And I think you nailed it on the head, which is, if you're a merchant in the global south, LATAM or Africa or anywhere, you can't really weather the volatility in the same way that somebody like a pleb in the US that's DCAing from their bank account can, because for them, it is in a way savings. But for these guys to say, you must accept Bitcoin for all your payments and then settle with your vendors or your suppliers in fiat, because those guys may be only taking fiat, that's asking them to shoulder an unfair burden, because they have to weather that volatility for things that they should not be weathering volatility on. So by having the spending accounts, one of them being dollar value, I think it makes it much easier for them to get into. But also, this sort of hierarchical separation of the two things is good, because we want to onboard hundreds of millions of USDT demand into Aqua and let them see Bitcoin at the top. Let them see that it is a savings account, and let them think about that every time they open the app to receive and send USDT. And at the very, very top, we have the price. So hopefully they keep an eye on that and see that long term, Bitcoin seems to be going up, and they would switch and swap into Bitcoin in Aqua from their USDT holdings.
And I wanted to also, I know that the Aqua app is available everywhere, but you're focusing on the LATAM region as the first first market that you're concentrating in. Can you explain your strategy for that?
Yeah, so we already have a lot of native demand for dollars there with stablecoins. So these are users that know how to transact, and they know how to scan a QR code and send and receive addresses. So we think that this is a ripe market for us to approach to get into Bitcoin. They may not be in Bitcoin yet, but it seems to be easier to reach that market than to, say, try to open a new market that has no experience. But overall, I would say LATAM is really ripe for adoption, just because there is a lot of Bitcoin adoption, there's a lot of stablecoin adoption, and there is a strong need for it. And I guess politically, they're very close to seeing a regional renaissance there because of El Salvador and Argentina. So we look at all these pieces of the recipe, and we just think, well, this is a great region for us to approach. It's also a region that has a lot of remittances. If you look at countries like Colombia, there's a massive amount of remittances through Bitcoin and USDT. So we hope to be able to access some of that by having Aqua widely adopted there.
Yeah, and I mean, I know I'm partial. I live in Mexico City, and I've had a venture fund for 10 years that focused on early stage startups. The majority fintech has been the leading kind of startup ecosystem here because there's so much need to be filled. But one thing that I've been a little bit disappointed to see is how much of the region gravitates toward altcoins or crypto, and it bypasses a little bit Bitcoin. So I really love seeing the focus on that, and just the usability and the practicality of it. So I think by having a truly functional wallet that's easy to store stable coins, and the combination with Bitcoin is just a great addition to it. How's adoption been, and um, how are you marketing it? I mean, I saw that you have in Bulgaria a football team that you're aligned with, and that could be a really good strategy here too. But how are you gaining awareness of the Aqua app in the market?
Yeah, so the adoption has been amazing. We didn't really expect the amount of interest when we launched it. We launched it on Jan 3rd this year, and we were expecting maybe 100 or 200 users, and it would have a lot of time to fix the bugs and iron out the issues that we know exist. But we just saw hundreds and then thousands of installs. I think we're at 25,000 installs now, and this is all organic. We haven't done any real marketing or any paid advertising campaigns. We did a couple of on the ground videos of people walking around and showing off Aqua, but that's just for fun, really. Um, but yeah, it's been an overwhelming experience just seeing the level of adoption. In Madeira, I think there were probably thousands of transactions that just like by people, the merchants telling us that they're seeing a lot of people using Aqua. Um, Peter McCormack had a booth there selling real Bedford gear, and he said half the people that were buying stuff were using Aqua. So I think it validates our thesis that people want a simple wallet that just works. And our abstraction away of Lightning complexity seems to be really what solves that problem for a lot of people.
Yeah, I mean, and I have used it, and it's really easy, and it's really intuitive. So the whole interface is beautiful. Can I just segue? Why the name Aqua? I'm always curious about the origins of a name. I know Jan 3, and you can explain that too, but I'd love to know why Aqua.
Yeah, so Jan 3 is named after the Genesis block's anniversary. So January 3rd, 2009 was the first Genesis block in the Bitcoin blockchain. So we just found jan3.com was available, and we thought, well, that's pretty serendipitous. We should just take it. So that is Jan 3. Aqua, it was started at Blockstream, and it was meant to be a very much liquid focused wallet. So liquid and Aqua kind of go hand in hand. And the interesting thing too is a lot of people that are fans of Aqua, they started making memes and funny pictures and stuff with dolphins and other things. So it's really great that there's a community of people that are fans of the wallet, and they help to promote the wallet, and they make really interesting things. When I was in Madeira, I think Nathan Day gave me a pin, a little dolphin pin, and someone else gave me another dolphin thing too. But it's just they're just running with the concept of water and liquid and dolphins.
Yeah, because Aqua is the word for water in Spanish. So where you're
Yeah,
like, so yeah.
but even more significance to the name is that it's like water. You need water for life, and uh, Aqua is meant to be your daily driver wallet, so it should be a critical part of your life.
Yeah, and fluid. Well, and speaking of, I wanted to talk to you a little bit about liquid versus lightning. And this may be a little technical for the audience, so we don't need to go too deep into it, but there are reasons to have a layer two chain that allow for um, more numerous transactions on Bitcoin, more inexpensive transactions, and so on that layer two, it seems like a lot of the discussion has been around Lightning, but as I was researching our conversation today and really finding myself diving deeper and deeper into liquid, which I've been aware of for years, but just didn't understand the benefits of it versus Lightning until I dove deep. So I'm educated now, and I'm definitely, trending toward liquid and seeing the benefits of it. Can you just briefly explain a little bit of the kind of the three main benefits of liquid? And why
Sure.
you
So
selected it to work on?
yeah, so Liquid is a Bitcoin sidechain, and when I was at BTC China, we were one of the first members of the network because I saw the potential for it in a number of areas: inter-exchange settlement, moving Bitcoin quickly between exchanges, using Liquid for payments, and basically a lot of different things. And I think in recent months, maybe in the last year, it's starting to become more clear to people why you need something like Liquid. And I believe they're realizing the wisdom of Adam Back and Blockstream of developing these two technologies in tandem. You have Liquid and Lightning. And I think a few years back, people were always saying, well, Liquid competes with Lightning. And why are you working on Liquid when we just go and we should just all do Lightning? But you can see now that you really have to have another thing to rebalance Lightning, because Lightning is a channel-based system. So Liquid is I'll go back into Liquid. So Liquid is a Bitcoin sidechain. It's anchored to Bitcoin, and you can only receive a liquid Bitcoin in the liquid network when you peg in a Bitcoin on the main chain. So the 21 million limit is enforced, but once your Bitcoin is in liquid or it's unlocked in liquid, you get additional properties, which is 1 minute block times, confidential transactions, and just, ability to use your Bitcoin more freely. Lightning is more designed for micropayments, and it is channel based, which means that you need to open a channel with somebody else, and then you can tap into the network that they have channels open to, and you're kind of pushing Bitcoin through these channels and trying to reach a destination. So there's this concept of routing. Whereas in Liquid, it's very similar to a Bitcoin transaction. If I want to send you 0.1 liquid Bitcoin, I just send you 0.1 liquid Bitcoin. There's no need for channels and routing. It's a direct, peer-to-peer transaction. Lightning, you have to route, and that results in, I would say, a degraded user experience because routing can fail if there's not enough capacity to the other guy you're trying to route to. The other challenge with Lightning is that it's capacity based. So let's say you're buying capacity from a Lightning service provider, an LSP. If that Lightning service provider wanted to service 1,000 people and give 1,000 people $100 of capacity in Lightning, that means that Lightning service provider would have to lock up that equivalent amount of capital to open those channels and to keep those channels open. So it's not optimal because they have to keep funds locked up for the duration of time that those channels are open. Whereas if I wanted to just send you $100 in liquid, I just send you $100 in liquid. There's no need to lock up and have excess capacity for other reasons. So it's a much more simple framework. But if you look at the dynamic between the two, if you think of routing, let's say we're just two people on Lightning Network. I have a channel open to you, and I am sending sats over to you on this side. Eventually, if I'm sending it all in one direction and you don't send me anything back, I will deplete my channel and I won't be able to send anything else to you. At that point, I need to rebalance. And the rebalancing, if you didn't have Liquid or any other way, you would need to splice or rebalance through the main chain. And that would cost a lot of money because main chain transactions are expensive. And they can be volatile too. It can spike up in certain days when the network is congested. So if you're relying on Lightning 100% in and of itself, you are 100% bound to the network conditions of the main chain, which doesn't give you that much of a benefit. But if you have a Liquid, then I can simply make a Liquid payment to rebalance the channel because there's an out of band method to top this channel up. And I think a lot of people didn't really understand this because for a long time, the fees on the Bitcoin network were cheap. So you could rebalance on the main chain. But with the spike in fees and the congestion, people started to understand, I need something else to rebalance. And we've seen a massive amount of adoption of Liquid just for rebalancing Lightning in and of itself. So the thesis and the plan for Blockstream to build these two technologies kind of became apparent to a lot of people in the past year.
Absolutely. I think that, I think it takes experience. It's like when you see the limitations of block sizes and how quickly they're reached with the new traffic that's being, inserted into them. And then the fee jumps up. And I think this is only going to be, more and more pronounced as we go forward. Are there other wallets that you're aware of that are working with Liquid, or is Aqua really the first or primary one?
No, there's a lot. I think Bull Bitcoin is now working on their own wallet. Peach Bitcoin integrated Liquid recently. There's so many now, I've lost track, but a lot of companies are adopting Liquid. And I think Strike is also using Liquid too for rebalancing, and they might offer it to end users as well. I've messaged Jack and Cash App, those guys, to talk about supporting Liquid as well. But we're seeing more and more uptick, and it's all organic, which is great because Liquid was not an ICO project. There was no sale of some Liquid gas token to finance the development of Liquid. It's just people building and contributing their time and energy to create this network and maintain this network.
similar to Bitcoin. So,
Similar to Bitcoin.
um, well, let's talk about kind of big picture Jan 3 and Aqua going forward. What is your vision over the next 12 months, 5 years for what you want to accomplish?
So I guess we are working on Bravo release now for Aqua, and then we'll have Charlie release probably in a month or two after that. After those two releases, we plan to ramp up the marketing. So right now everything is organic, but we plan to do some actual campaigns to onboard more users because the mission is to onboard the next billion people. We have in our pipeline of development a lot more work needed on integrations. So the core premise of Aqua is it has to be useful as water is in your daily life. So we need these on and off ramps. We have plans to integrate a debit card, VI-ban, everything you would need, but the core of the wallet is always going to be non-custodial. And we think this model is going to be ending up more prevalent in the space and maybe even in traditional markets where you have a platform, a wallet that the user controls their funds and has their own keys, but you have all these services that you can connect to for on and off ramp purposes. So that's going to keep us pretty occupied for the next couple of years, just adding on ramps for every region. And you can kind of see that that is the plan because we have the marketplace tab in Aqua and you can select your region. So if you're in Mexico, we want to have a wide assortment of services in Mexico that you can use. And if you're in Argentina, you'll have tailor services for Argentina. Or if you're in Belgium or Sweden, you can have different services there too. So the goal is to make this very, very useful. Utility is the driving motivation for all of the development roadmap.
So in the marketplace, that might mean that you could pay utility bills or sell, up your cell payment, your minutes on your cell phone or things like this that are practical expenditures and other merchants services. Is that the idea?
Yeah, that is the goal, that you can do all of that stuff. We will probably focus on and off ramps for fiat first, and then add things like bill payments as they come up.
And what's the monetization model for the wallet for Aqua?
Right. So we integrate a lot of different service providers. So Aqua and Jan 3 itself, we are just the technology platform or the infrastructure for all of this stuff, and we're just writing code. We integrate third-party services like SideSwap, SideShift, Bolts, and other things that are providing these services, and then we have a referral fee from them for all the swaps and conversions that people do. So that's really the business model. And also for on and off ramps, then we will also have some basis points on every buy or sell transaction.
So then volume becomes very important. So mass adoption, and it might be small fractions or micropayments, but in the scale that you're looking at, then that's when it becomes such an important part of the ecosystem.
Yeah.
Great. How is Jan 3 funded, and will you be going into the investment market at any time, or what is your model of financing?
Yeah, so we originally had a seed round, but we ended up parting ways with a lot of those investors for different reasons, and we did a pre-seed round sometime last year. And this year, we're planning to go and redo our seed funding round, and probably in April or March. But yeah, we are looking for funding to expand development and marketing of Aqua.
Great. And so that'll be Gen 3 overall, correct? But focused on the aqua product development.
Yeah, well, Jan 3, possibly Jan 3 Financial as well. We'll allocate some resources to that to build out more technology to support that Bitcoin buy service. And yeah, but the overall entity that is getting investment is the parent, which is a BVI Corp. And under that BVI Corp is everything that we're doing.
So your ideal investor would be who, Samson? I mean, who would you like to reach out to you to express any interest in being a part of the next round that you're raising?
Well, we would like to see if we can find investments not in the Bitcoin circle. maybe funds that are interested in developing markets that are not necessarily Bitcoin funds, because we see that it's an opportunity to orange pill different pools of capital that are not necessarily Bitcoiners too. And we can use Bitcoin to meet the same goal that they have in investing in developing markets. So that would be interesting for us. But of course, we are talking to a lot of the usual suspects in the Bitcoin VC ecosystem.
Which aren't that many. And I think in the traditional VC ecosystem, so many have gravitated to the Web3 and tokenization models, but I feel they're missing a lot in terms of the opportunity that Bitcoin technologies really provide, which I think will become apparent with time. So great.
Yep,
Well,
I think so.
hope we can introduce more traditional investment to the opportunities that are here.
Yeah, we definitely want to avoid all the crypto VCs as much as possible.
I completely understand that and agree with that. So, well, what else? I mean, when you're looking at talent, I mean, another part of a startup ecosystem is, in addition to investment dollars being now just introduced to what the potential of Bitcoiners, there's also the subject of talent and engineers and people working in traditional tech that might now be coming attracted to Bitcoin. How is your talent pipeline running, and what needs might you have as you go forward?
We are primarily looking for developers right now to build Aqua and also backend infrastructure. But we do have a lot of people reaching out that want to help with nation state adoption. So this is sort of a flag for us that we're known as the nation state Bitcoin company, and that draws a lot of people to our cause. But for hiring purposes, what we really need are developers. So if you know any developers, Flutter developers, um, backend, then those are the profiles we're looking for in the near term. And then maybe when nation state adoption really kicks up in high gear and we have a lot of Bitcoin bond issuance, perhaps some finance profiles would be good.
Right. Samson, as the CEO of one of the earliest Bitcoin companies around, how are you seeing the ecosystem change now? Are you seeing more people become attracted to Bitcoin as a financial technology, or what advice would you give somebody thinking about starting a company based on Bitcoin or built around Bitcoin?
Well, I would say if you're starting a company based around Bitcoin or working on Bitcoin or focused on Bitcoin, it's not going to be a quick path to easy money. This is why a lot of the VCs invest in the crypto companies, because they're just running scams. And I mean, it's really easy to make money off of a scam, but Bitcoin is foundational, transformational technology, and it requires actual work. It's like proof of work versus pressing a button to print money. So for us, like onboarding a billion people, that's not an easy goal. That's going to require integration with a lot of services and a lot of elbow grease to build that, maintain that, and roll it out. But if you just make something like WorldCoin and scan eyeballs, then you're probably going to make a lot of money very quickly. So I guess my message is be prepared if you're in Bitcoin that you're in it for the right reason and you're prepared to be here for the long haul, because it's never going to be a fast path to success or quote unquote success like crypto or Web3.
What does success mean to you? I mean, obviously you feel I see you being driven by more than just a financial gain or a quick exit. So what is it that drives you?
It is really Bitcoin adoption, because I believe Bitcoin fixes the world, and it is key for us to move forward as a civilization. So there's nothing more important than getting more Bitcoin adoption. Um, it's sometimes said like Bitcoin stops war, and it sounds very cliche, but actually Bitcoin does stop war because it takes the power away from those that print money. And printing money is what causes a lot of the strife we see in the world today. Either war, inflation, poverty, societal ills, all of these things, they're fixed by the money being corrupted. So if you want to fix the world, then you get Bitcoin adoption. That is the solution.
I agree. Samson, where can people find you? How can people learn more about Gen 3, Aqua Wallet, and yourself personally to follow along with you moving forward?
I'm on Twitter. Excellion is my handle, or X nowadays. EXCELLION. And Jan3 is Jan3Com, and Aqua Wallet is at Aqua Bitcoin. So you can find all those things if you go to jan3.com or yeah, or my Twitter profile.
We'll add those all in the show notes so it makes it easy to follow. Any any parting words or thoughts or ideas that you'd like to share?
I don't know. We covered a lot of things already, so it's quite exhaustive.
Okay. Thank you again so much for your time, Samson. I really appreciate your spending time with Build with Bitcoin.
Thank you, Lynn. It's been great.